What's up everybody, Tom here with another video. In today's video I'll be talking about why this coiling effect is the most important to be watching in the markets right now. We'll also be talking about our technical analysis levels for the SP500, Nasdaq, gold, Tesla, and more. We just had massive earnings come out of Apple, Qualcomm, Facebook, and others, and the market is moving up after hours. The question is, will it be able to continue? Stay tuned to find out more. Alright guys, well as we do on this channel, let's have a look at what happened yesterday in the stock markets for the 28th of April. And you can see here that we had Microsoft down after its earnings were great, but just not up with the price action that we'd been seeing. And then we had Google moving forward, and of course Facebook moving up because of Google's great result, Amazon, etc. Tesla unfortunately did suffer, and some other stocks you can see here was a smattering of good earnings and bad earnings, with actually energy sector coming through after oil broke out again. Now what everyone's going to be talking about is of course the Apple result. The Apple result has pushed Apple through the resistance, the critical resistance after hours. And we'll be talking about that more in our pre-market analysis. So join us 1.5 hours before the stock market open tomorrow, because I think this is the most important chart to be looking at for the market breaking to a new high. Here's what was going on in the market yesterday. You can see the J-Pow effect. Of course, we had the Fed come out, and really what I got to say is that the Fed is committed, and they're showing their commitment to exactly what they're saying. They're not slowing down, and they're saying to the market, we've got this, we're going to keep doing it, and don't you worry about anything because we're here to stay with our support of the economy. That's of course leading to a little bit better sentiment in the markets, but that can be short-lived. As we know, it's a bit fickle there. And yesterday was all about energy with that strong breakout in oil that we looked at in the pre-market. Really great pickup there by the community. We've been talking about oil for quite some time, double bottom on the smaller time frames, and the breakout occurred. When we now have a look at what was the weakest sector in the day, XLK, the technology sector, was the weakest, led by of course things like Microsoft, etc. But I think a lot of that was really just also people had some nerves coming into the Apple and Facebook announcements. When we're talking about what's going on in the markets right now, I've been using this chart quite a lot, and I still think it's worthwhile having up. We're making that new high, it looks like now. We're coming into the back end of April. This is super earnings week, so will everything fall flat next week? Time will tell, but it looks like we're about to break to a new high, and that's what's exciting. We'll be talking about that S&P 500 break in just a few moments. Also, earnings beat data still incredibly large. 89% beats 526 and misses 65. What an earnings season. If it wasn't for the market being parabolic already, you would think that everything is super glorious in the economy. Let's have a look at the PCC. Rebounded very heavily here with a whole bunch of puts being opened yesterday. Remember, a high PCC, put call ratio, means puts are opened, which means people are starting to hedge positions in. I think a lot of that was probably positions opened ahead of Facebook and Apple earnings. When we go over to the dollar index again failed to make a new high. And the great thing for that is that it means that the dollar index continues its way down towards that 90 level. And it looks like almost inevitable now that it will go towards 90. Previous support. You can see the zone and the steepness of where it goes. What's that good for? Gold. Gold's back, and it's moving forward in our longer term time frame here to the 1825. So gold broke out very nicely here, got above that 1774. Now we're trading around that 1783. We need a 1783 plus closure here. Once we get that, we can move on to the previous highs, these 1796 levels. And why is it 94s? Who knows? We've got 74, we've got 84, possibly even 94. No, it's about 96. But yeah, gold coming back through, dollar index weakness, and you can see just again why you've got to wait for that little bit. See how there's like a whole bunch of conjecture here on the 2 hours where it tries to sell off and then fails to do so, and then just all of a sudden takes it out. When that happens, you know that a whole bunch of stop losses are being taken out, and you can be very, very, very happy with that type of move. In fact, I usually go down to like a 15-minute chart and have a look at the price action around the time. So you'll notice lots of coiling, little bit of a false break followed by basically a long leg doji on both sides. So indecision breakout. And this is actually for many day traders the signal that they'll be using to take further longs. So it's yeah, really good look at the markets here, and a great look at a very perfect support resistance zone that we correctly identified as a community together. Let's now have a look at Bitcoin, because of course Bitcoin is struggling with the 55,000 area. You can see the 4 hour, 20 and 50 have now crossed to the upside, but what we've been worried about has always been this daily 20 and 50. The daily 20 and 50 are the real deal. We've now had long leg doji, and you guys know what I feel about long leg doji. As soon as we get a closure above long leg doji, let's say we close above this zone, that would mean that we get above 56.4. We will have made a decision. Now, if we close below the long leg doji, of course, we've made a decision to go back down to the 51 area. However, at this point, things are looking strong here for Bitcoin. Cryptocurrency is still running really, really hot. And once the decision is made, we can move onwards to the 60,000, which is great resistance. And then, of course, 65 onwards. I still don't think that the Bitcoin cycle is over just yet, but long leg doji has me excited, because that kind of level there is now going to make a great decision, and then we can be trading and investing off that opportunity. Now let's have a look at what's going on with Tesla. Unfortunately, Tesla was disappointing, another disappointing day. And we went through this in the live discussion. We were talking about earnings, and we were talking about the market reaction after earnings. So look, every market reaction after earnings, even if it's been a good result, has generally been negative on the market. And I think that's because retail traders tend to buy into the rumor and then sell the fact here a little bit. You can see the weakness that happened last time for a couple of days. Then you go back over here, you can see the weakness that happened for a couple of days, etc. So it's not unlike Tesla to have weak days. The problem is yesterday's candle was nasty, to say the least. That's the type of candle you do not want. And this candle here is starting to really play into the game of getting back towards a 670 price, or a 666, as many people have been calling for on Tesla. That's not the type of candle that you really want to be buying off. It's pretty much showing the confirmation towards further bearish pressure. We'll have to see how it plays out over the next 24 hours. These are our levels on the support side that we've got currently. Some people will be drawing 625, which is totally valid through those last two wick buys. Remember, this is where ARK picked up big investments and it acted again as a key level. But I'm just going with the 600 round and the 670 for this stage. So we'll see how Tesla reacts in the pre-market today. Join us again 1.5 hours before the stock market open. Tesla, not much else to say about that other than when it gets back above 700, if it can do so, 720 remains the small resistance on the day. Let's have a look at the Nasdaq, because the Nasdaq's setting up really nicely for a breakout. We've talked about the 14,050 a few times. Now, whether you use QQQ or you use NDX in TradingView, it doesn't really matter. The main thing is they will have the same exact close resistances. And you can see here how beautiful this close resistance is at 4,050, and also how great the support is now at 13,725. I'd say this is a fully fledged ability for either a double top, if it came through and shorted off, which of course would be bearish, or if we move up, it gives us our range. And our range is going to be the distance between these two, which is what our expectation will be. And that expectation goes towards 13,400-ish area. And this is all perfect because, of course, we've always had that as our main target here due to the inverse head and shoulders, which is targeted 14,004. It's nice when things make technical sense, isn't it, guys? And that's why we proof things in the market. If things work like this, you can never be sad about a coiling market right above a resistance, because really what it's telling us is it's coiling ready for the next move. And when it does break out, and if it does, things get very exciting. Now, at the time of this recording, we have the US 100 getting heated up. We've got a 14,000 number on the US 100. It's actually 14,001 on the futures. So it'd be great to hold above that. And then, of course, move towards that 14,050. But this is the chart that everyone's looking at. Monstrous amount of coiling. Check out this 4-hour chart on the SP 500. The thing has no decision whatsoever. But the good news is Apple earnings, good. Qualcomm earnings, good. And Facebook earnings, good as well. Both or all of those together really starting to drive sentiment up here, with JPow coming through with a 4199 in the futures right now. And that puts us, if we think about it, right here. Now, if we get any closure above this coil, what in essence is happening? We're taking the same distance that we had on that Nasdaq chart, because they're basically carbon copies here, and we're extrapolating that out. What does that take us to? 4250, 4260, which is in line with our community trend line projections. Remember, we still have our community trend line going on here. Let me pull this out a little bit. There it is. There it is. It all makes a lot of sense. The community trend line will be lining up with it. It's lining up with our kind of new tick high off the earnings, and then sell in May and go away. We'll have to find out more. We'll have to see whether the price action agrees with this. Of course, we're still bulls, but we're cautious bulls in the market. And that's what's the best thing about TA, is you don't say, there's no shorts. We're the shorts. We don't see the shorts. But when we are cautious, we can say, okay, well, we're going to be a little bit more careful, and you're just protecting yourself, really. That's all you're doing. So I love the S&P 500 chart here. Things are looking really, really great, but we need to always keep in the back of our minds how far we are away from the weekly 20 moving average. Remember, this is the God pickup. This is the best area that we've seen all the way through these pullbacks. When you get too far away from the 20 moving average, it seems to pull back. And we actually did a measurement the other day together of how far we were away from the 20 moving average at this point. And I think it was around 12-ish%. There we go, 12.76. So let's have a look how far away we are from the 20 moving average currently. We're 7, and at the top here would be about 9. So not the furthest, but I think if you took averages, you would find around 9 or 10 is usually about as far away as it can get without having a fairly significant pullback. There could be a correction coming, guys. Be cautious out there. J Powell trying to pull those markets back up, as he always is, because of course it's easier for him to do so, and some great technicals showing. As always, if you enjoy the video, please remember to subscribe, hit that like button, or smash that like button if you can, and we'll see you 1.5 hours early pre-market for Thursday. Earnings week continues with Amazon and others. In fact, I don't even know if I bought it up, but just remember, you want to have your earnings calendar here. So we've got all these ones that have come out so far, and we've still got Amazon, Neo, Twitter, and others to go. Have a great day, everybody. See you soon.